For Market Winning Strategies, this is Mark Shawson. This is May 8th, 2015. And in this video, I want to discuss the impact of government releases, important reports, breaking news, or other special events that may impact market movements and how you can trade these. It's my view that the markets are inherently a discounting mechanism and usually indicate the direction they are likely to head well ahead of unfolding events. It's also my belief that knowledge of a few simple price patterns and understanding of price action trading can help you capitalize on trade setups well ahead of breaking news and the ensuing crowd effect of unenlightened traders getting in at the top. Before I get into my analysis, I'd like to share with you an amusing story that illustrates what I'm trying to explain to you. So earlier this week, I was having a discussion with Vicky, my marketing partner. Vicky lives in London, in the UK, and I was telling her that based on what I was looking at, I really thought that the British pound was looking to head higher. And she cautioned me that there was some very important elections coming up at the end of this week. Now, I have to admit that I don't typically look at news in consideration of my trading, and I'd kind of forgotten that this event was unfolding this week. But I responded to her that based on what I was looking at, no matter what the outcome, I felt pretty confident that the pound would still head higher. And let me explain to you the reasons for why I felt this way. So in this chart we're looking at, we're seeing this is the pound versus the US dollar. And as you can see, the pound has been in a pronounced downtrend for the last 6 to 8 months. And typically I don't try and get in ahead of trends or fade them. But in this case, I started to see the emergence of what I thought could be a bottoming pattern, or certainly a pattern that indicate that this market was going from bearish to neutral. So let me explain to you what I'm looking at here. So in middle of March, we had the first penetration of a low at the 146 area. And sometime in April, we after rebounding off that area, we came and made a new low under the 146 price level, forming this effective double bottom right here. Let me just write this in just so we can keep track of it and you can understand what I'm looking at. And to look at it another way, you can draw it this way, and you can see that after going to the 146 area, bouncing off to the 150, coming back to the 146 area, and then bouncing up, we formed this W or double bottom pattern with the neckline coming in at or about the 150 area. We initially got in this market right around here on this inside day bar, was able to take advantage of this run up, got out when the market reversed, and as typically will happen when a market is coming right off the bottom, it will retrace, and typically it will retrace back at or near the breakout area, which you can see that this market did. Now on Monday, we started seeing this bar here, which I'll refer to as a narrow range or a narrow range 4 bar, an NR4 bar. The reason why I call it an NR4 bar is because you can see that the high and low of this little bar here is much smaller. The range is much smaller from the high to the low than the preceding 3 or 4 trading sessions. So hence the name a narrow range 4 bar, the narrowest range in the past 4 trading sessions. So based on the presence of this double bottom pattern here and the NR4 bar, we then put a buy stop strategically placed above the high of the NR4 bar. And I'm just going to draw in the buy stop right here so you can understand how we entered the market. And we entered right around here at the 152.27 area. And we were able to take advantage of this run up. The run-up started actually well ahead of the announcements today that David Cameron's government had successfully won re-election. But the market was already anticipating this yesterday and started, going much higher. But to me, again, I'm not a genius. I don't have a mole in David Cameron's government. This price movement was already baked in the cake. Starting back in March and April of this year, when it showed a double bottom. So let me show you exactly how we were able to take advantage of this market movement. So as I indicated, we got into the trade at 152.27. Um, we took partial profits at 154.53 on our first order. So when I saw it heading at or about this area, I anticipated that it may have an initial setback, and we took partial profits. Now, let me show you what I'm looking at on a longer term basis and why I'm looking to hold our initial order a little bit longer. So in addition to the double bottom short-term pattern, I'm starting to view that this market is setting up a longer term pattern, which looks like an inverted head and shoulders. So if you picture a man's head and shoulders just turned upside down, we have what's called an inverted head and shoulders with the neckline at or about where price is headed today. So I believe that if prices break above this area, that we could have a substantial move higher in the British pound versus the US dollar. So if you'd like to learn how we take advantage of these and other patterns, please consult our website at marketwinningstrategies.com or mark@marketwinningstrategies.com. You can contact me at any time. So until next time, for Market Winning Strategies, the best trading education anywhere, I wish you a healthy and prosperous trading day. Okay, bye-bye now.